Hello everyone and welcome back to the channel, and I hope you guys are doing great. In my today's video, I'm going to discuss with you about a company called Jeena Sikho Lifecare Limited. So they are into Ayurveda, where they have two parts of to their business. And if you look at the screen over here, they have something called as services, where they have hospitals and clinic and daycare, and then they have products which the Ayurveda products which they sell through e-com, telecalling, and through the pharmaceutical distributors. So these are their business model, and that's how they make money. And generally, if you look at the revenue contribution, and in Q1 of FY27, services contributed to around close to 106 crores, which was around 47% of the revenue, and products contributed to around 118 crores, which was around 53% of the revenue. So this is the business model. And if you look at the contribution from both the divisions, it's almost 50-50. Let's look at their income statement and see how well they have done. So if you look at the screen over here, right? So in terms of revenue, if we see, it grew by almost close to around 29% from 174 crores to 224 crores for in Q1 of FY26. And if you look at the EBITDA also, it improved from 78 crores to 92 crores, which was around 17%. And if you look at the uh, profit after tax also, it grew by almost 28% from 51 crores to almost 65.6 crores. So over here, if I just tell you about the numbers, right? Like the revenue growing by 29%, the profit growing by 29%. Anyone, if they just look at this number, they'll be like, oh, the company did well. Yes, if I just look at these numbers, I can also assume that. But any result that the company posts, right, it has to be looked with the lens of what they were doing before and what was the expectation from the market or what they had promised. Because that's where the main thing lies. And if you actually looked at the stock right after the result, it was brutally battered. The main reason is why is right because what the company had delivered earlier, the growth which was north of close to 45 to 50%, and to what management promised to grow in the next 3 to 5 years, there was a huge gap. So the market expected the company to grow by at least around 40 to 45%, but it grew only around 30%, and they did not like it. And the pace of growth came down. And in stock market, when the pace of growth comes down for a company, automatically the market punishes it. I mean, I think if you would have, you can go and check in any historical, or if you're following any company, you would say the same thing. But that does not mean that the business is bad. It's just about the expectation and the reality. So let's look into it further. What did the management said on the con call, and what should we expect from the company forward? So if you look at the quote, right? So I've just got this quote from the management that they said on the call, right? So there was a question asked, guys, why the revenue did not get at a much higher rate, and why did we do well? So the I'll just quote what the management said on the call, right? So the management said this: as I have stated before, do not judge us on quarter basis. Judge us according to annual system, because we are developing a massive ecosystem whose reflection will be visible in the next 2 to 3 years. So that's what the management is saying. So in short, what the management is saying is, right, I've always told you before, don't judge us on quarter, judge us on the annual basis and whatever we're building in the next 2 to 3 years. Okay, that is right from the management side what they have said, and they have already communicated. But one need to understand, but how does the market look? They don't care about what the management saying, they look at the results. I'm not saying that the company will not do well in the next 2 to 3 years. They might start growing at a much faster rate and achieve that, but at this point of time, what the market is seeing and perceiving, they did not, definitely did not like it. And one of the other another question which was asked, right, that what we are seeing in the past 3 to 4 quarters, that the services side segment, the revenue has been stagnant to around 100 to 105 crores, even though the bed count is increased. Over here, what the management said is, right, the one of the main reason is because they have reduced their government business. And at the back of it, even though the beds have increased, in terms of overall contribution has reduced. So that was the reason that the management gave. And there was a question asked about their agreement with this pharmaceutical distributor called ENTERO. They were asking when are their products going to be available at their pharmacy, and they're going to start distributing it. So the management said that the testing and everything is complete, and by end of August or start of September 2026, the product should go into the distribution line and going to start selling from there. And in terms of the guidance, right, the management still maintain that they want to increase their beds to 7,000 to 1,000, 10,000 beds in the next 3 to 5 years. And another thing that they said, right, they want to achieve a revenue target of 3,000 crore in the next 3 to 5 years. So here is where the problem lies. See, if I look at this target, right, of 3,000 crores in the next 3 to 5 years, if I look at the 3 year CAGR, it comes to around 55%. And if they achieve in the 4 years, it will be around 39%. And if I look at the longer side, which is 5 years, which would be around 30.26%. But again, what the management is saying that if you heard the quote which I said earlier, right, that whatever they're trying to do will reflect in the next 2 to 3 years. So from that perspective, anyone would expect a revenue growth of around 40 to 50%. But the company did not deliver. And that's why it got punished. And now, unfortunately, the stock will not do anything for the shareholders unless and until something changes. Unless and until the revenue starts, you know, the growth starts picking up, or they're able to achieve what they're saying in the next 3 years. That's only that's how to say that's only it will make money for the shareholders. So that is the reason why it is very important, right? Whenever you are tracking any company or you're following, you need to look at the pace of the growth, like speed of the car. When the speed of the car is high and the car is able to maintain that speed, or like a business is maintained able to, the market will keep reporting it no matter how much is the P. But when it goes down, the expectation is automatically come down. So automatically the market will punish it also. So the reason I'm sharing this with you is like, so whenever we are investing, we need to keep an eye on this, right? So let's take an example. We invested in a company where it was growing at 50%. And we invested, let's say, 1,000 rupees. And the company grew well for the next 3 years and it grew at 50%. And the 1,000 rupees became 4,000 rupees. Now, as soon as the pace of growth comes down, no matter what the company has done before, the market will not care. It will start punishing it. So, personally, if I was in the position, I would, how to say, save my profit, and I might not completely sell it, but at least I would reduce my position drastically so I can save the profit which I made. Otherwise, market will punish it. I mean, I can give you the old example of Trent. It went to the high of close to 8,000 rupees, but when the sales of pace go down, it, the stock almost half to close to 4,000. Right? So one needs to understand the pace of growth in the stock market for businesses, right? Market looks at that accordingly, rewards and how to say punishes it. So please keep that in mind whenever you are analyzing any business, whenever you are investing in any businesses. And if you guys like this analysis and the video, please do hit like and subscribe to my channel. Thank you and God bless.